Let's break down the proposed $53 billion takeover of PayPal by Stripe and Advent International and what's really going on. PayPal is still a payments giant, about 439 million active consumer accounts. Venmo is an iconic brand, and Braintree, which processes around 600 billion in enterprise volume. But its stock has collapsed roughly 84% from its 360 billion peak in 2021. That peak came in a zero interest rate world where growth names were heavily overpriced. As rates rose, PayPal's multiples compressed, even though it still generates strong cash. On Advent's side, this is a classical private equity move. PayPal trades at roughly 10.2 times forward earnings versus about 20x for Block and 25.5x for Visa. Advent's playbook: buy a mature, underoptimized asset at a low multiple, take it private, cut costs, fix operations, and exit later at a higher valuation. The upside is the gap between today's depressed pricing and a future cleaned up PayPal. For Stripe, the move is purely strategic. They're leveraging their $159 billion valuation to buy a consumer identity layer overnight. The goal is to fuse Stripe's AI-driven Link wallet with PayPal's massive distribution to create a dual-sided payment network. This allows Stripe to own the entire transaction journey using PayPal's data to power autonomous AI agents and stablecoin infrastructure. This deal signals the end of the pure-play processor era as legacy firms are squeezed between big tech wallets like Apple Pay and new crypto rails. A combined Stripe-PayPal stack would become a unified backbone for global commerce, processing over $3.5 trillion annually. Structurally, this is a co-ownership deal. Stripe and Advent would hold equal stakes, pairing Stripe's technical engine with Advent's turnaround discipline. There are two major points of friction. First is price resistance. Investors like Michael Burry argue that the bid of $60.50 is too low, while Morningstar pegs fair value at $80. Second is the regulatory wall. Combining Stripe, PayPal, and Venmo creates absurdly high market concentration that could force major assets like Venmo to be on the chopping block. Everything now hinges on PayPal's July 28th earnings. If new CEO Enrique Lores proves the turnaround is real, the board can push for a higher price or walk away.